we ended the year with about 155,000 ETH, and most of it is staked and generating yield. Staking revenue actually increased by 300% this year, so that almost half of that came in the fourth quarter. So we're really ramping up.
Hey, welcome back inside our proactive newsroom. And joining me now is Sam Tabar. He is the CEO of BitDigital. And Sam, it's great to see you again. How are you?
How are you? Thank you for having me.
Yeah, good to have you along. The company out with your 2025 results, also your monthly results from March as well. So lots of stuff going on with the company right now. So why don't we start with sort of 2025 and what was kind of the things that really hit you as those numbers when you read them for the first time?
Yeah, well, look, we generated about $115 million of revenue in 2025, which is up 5% year on year. The results reflect a deliberate shift in the business. We are winding down the Bitcoin mining business. We're reallocating it into higher return areas. Mining declines were offset by growth in Ethereum staking and also our HPC business. So on the Ethereum side, we continue to scale the treasury. We ended the year with about 155,000 ETH, and most of it is staked and generating yield. Staking revenue actually increased by 300% this year, so that almost half of that came in the fourth quarter. So we're really ramping up. That is a revenue stream that we expect to keep growing as we build that Ethereum position over time. And look, we also continue to hold a majority stake in White Fiber, which is a company that we IPO'd last August. And to be clear, we have no intention of monetizing that position in 2026 this year.
Okay. You mentioned you stepped away from Bitcoin. Do you keep an eye on Bitcoin as potentially, maybe moving back in that direction in the future? Is that something you always look at?
No, that decision is effectively irreversible. We started moving away from mining, from Bitcoin mining about several years ago. We saw early that the economics just don't stand up. The math just didn't work. We were one of the first to announce that we'd leave Bitcoin mining. We got a lot of hate from that at that time, but we were proven right. Every single Bitcoin miner in the sector has now moved away from Bitcoin mining. Look, hash price is declining. It means basically that you have to invest more capital just to maintain the same output, just to stay standing still. So that's just not a business we want to underwrite. Instead, we decided to redeploy that capital into areas with much better return profiles. So first cloud, then colocation, and now Ethereum. And today we've become a strategic asset company. So we focus on two areas, Ethereum as economic infrastructure and AI infrastructure through White Fiber. So that's a much more durable model in our view.
Yeah. Can you talk on the Ethereum side a bit about the strategy behind Ethereum and how you look at it?
Well, at its core, we believe that Ethereum is a programmable financial infrastructure. So staking is the first layer. It allows us to earn yield directly from network activity, which is very different from Bitcoin. Bitcoin, there is no yield. But we also see a broader view of Ethereum over time. That includes optimizing that yield and participating more deeply in network economics. We are scaling thoughtfully. We're not chasing size just for its own sake. We also think it's important to be very disciplined with capital. So it's a model that simply raises equity to buy a digital asset. We don't think is the way forward. It becomes much harder to maintain that philosophy when markets tighten. So, when both the asset and the equity tend to move together, that can make capital raising dilutive at the wrong time. And so we're trying to avoid that position. We see value in ETH today, but we also believe our equity is undervalued. So we're not inclined to issue stock just to grow the balance, but it can be done in a measured way. Instead, what we're trying to do is just build a broader model that includes cash generating businesses that we intend to potentially acquire. And we think that that will create a flywheel. We generate cash from the acquired business, we allocate it into more attractive opportunities, and we grow ETH per share over time. We think that's a much more attractive flywheel approach.
So your potential then for M&A is still very strong then. It's something you look at it almost on a daily basis.
Yeah, we actually have a process going on right now. We're looking at various candidates. We are not standing still. We think that the simple model of raising capital and then buying a digital asset is not always sustainable across cycles. In bull markets, it works well. In bear markets, it becomes pretty dilutive. So that's why we're focused on building a cash generating business inside the company or to acquire one that gives us flexibility. It also allows us to be opportunistic where others can't really be. So right now, funding in crypto has pulled back. That creates opportunities. There are good businesses available at more attractive prices for crypto adjacent companies. But we're disciplined buyers. We're not going to force an acquisition. But if we see something that can unlock shareholder value, we're very well positioned to act.
All right. Sam, we'll leave it there. Thanks very much for the update. Appreciate it. Look forward to our next conversation. Okay.
All right. Thank you so much for having me.
All right. Sam Tabar, the CEO of Bit Digital.